David here, Weekly Look. Today is Saturday morning, 23rd of February. We're looking at the May contract on the 2019, and we've got the daily chart in front of us. Just looking at something a bit different here. Just looking at pulling some Fibonacci levels over this old crop contract at the moment. We can see that market has retraced back down to test the 50% level here at 175. We looked at this last week, came back, and now we were knocking on the door of 170. That broke during the week, and we came down to a low of 163, closed on Friday night 166. Where are we going next, and what are we looking for? Crucially, I would say that this is indication that we've broken out of this range, which we can see on the old crop has been going on for 6 months, and we've certainly broken this level, 50% retracement, 175. We've certainly gone through the 170, 163. We're having a bit of a bounce. I've just been looking at the chart to see why that is, and if you look at the monthly continuation chart here that I've got on in front of us, we can see an all-time high here of 12, of 227, and I put the recent low 100. The 50% level becomes in here at 163. So if we just go back and look at that chart there, you can see that this is touched to the T here, 163, a low with 163.38. So looking for a bounce probably during next week. Where we would look to bounce to go, I must say that word obviously. We look for a level to go back up of resistance, and I would see that at 170. We've got a moving average up there on this blue one here, comes in at 30-day moving average at 171. We had two green candles Thursday and Friday, and stochastic are heavily oversold, just turning around. So I would look for a bounce next week of £5 a tonne to go up and test the 170. If we don't see that and we take out this swing low at 163, that opens the door down to 150. But my indications are that we are heading, unfortunately, back down to this 150 level, and any bounce would be seeing as a selling opportunity. This would all change if we retook the 60 SMA at 175. Just swap over to the new crop contract. This one we've been watching has come down to test the support level 150. This is now happening. We are also testing the 30-monthly moving average. We've got a target down here 140. Let's see what's happened during the week. We can identify these two big red candles. We're coming towards the end of the February, and we're still forming in red at the moment. Go down into the weekly. We can identify two negative weeks at the start of the month, but we have formed with this kind of like in and pushing us back up to the 150 level. Let's pop down into the daily. We can see here that the market has broken this swing low here, 153. We left a gap here. Now, the gap would be an indication that if we do see a bounce now, I'd look for that to be filled, and that comes in at 153. We've also got a bit of divergence on the stochastic. We've got a higher low coming in on that, so that gives an indication. We've had two positive days. We've got a long wick on this candle, so I'd be looking for a bounce of the same as the old crop of possibly £4 a tonne, £3 a tonne up to this 153 level. But unless we take the retake the 60 SMA and see sort of over a £10 a tonne bounce, I'm still on the opinion that unfortunately we are going down to test the target of 140. 150 would be a crucial level to see tested again this coming week, and I'll put an update this time next week. Thanks for watching.